The House passes Tax Relief for American Families and Workers Act of 2024, and as it heads to the Senate, here's a breakdown of some key items to be aware of for individual and business tax in the US. Welcome news for parents. Under current law, the maximum refundable child tax credit is limited to $1,600 per child for 2023. Now, the proposed change increases the maximum refundable amount per child to $1,800 in tax year 2023, $1,900 in tax year 2024, and $2,000 in tax year 2025. As the US cannot enter into an official tax treaty with Taiwan, the bill provides treaty-like relief for Taiwan residents. For personal tax, the biggest impact would be for non-US citizens and non-green card holders from Taiwan who have US income and file Form 1040NR. This bill provides significant tax relief for all types of income, including wages and investment income. For real estate investors, those subject to the Foreign Investment in Real Property Act, or FIRPTA, this reduction won't apply. Now, onto businesses. There are a number of expansions of existing benefits in this bill that were previously slated to expire. As businesses grow, they invest in research and development. In tax year prior to 2021, these expenses could be deducted in the year in which they were paid or incurred. Under current law, domestic R&D expenses are required to be amortized over a 5-year period. In effect, this means that if you spend $1 million on R&D, you can only expense $200,000 of it in a tax year. The proposed law would enable businesses to fully expense domestic R&D expenses through 2025. Now, using that same example, a business that spent $1 million on R&D could expense the entire $1 million in that year, reducing its taxable income. It is possible that businesses will be able to amend 2022 and 2023 if filed to retroactively increase their domestic R&D expenses. More US businesses such as partnerships and S corporations are allowed to deduct interest expenses. The new law would restore depreciation, amortization, and depletion to carve out in the calculation of adjusted taxable income for tax years beginning after December 31st, 2023 and before January 1st, 2026. There is no information yet, but it's likely amended returns for such businesses would be required to take advantage of these benefits retroactively for 2021 and 2022. More good news for businesses. Limitations for bonus depreciation will be postponed a few more years, enabling businesses to fully depreciate property placed in service for 5 more years. Previously, first-year depreciation was set to decrease from 80% in 2022 to being eliminated altogether in 2027. The proposed bill would increase the threshold for the need to file Forms 1099 NEC or 1099 MISC by businesses paying for services performed by an independent contractor or other similar payments from $600 to $1,000 for payments made after December 31st, 2023. After 2024, the $1,000 would be adjusted for inflation. Let's stay tuned. Subscribe to our channel for more updates on tax changes. And remember that TFX is here to handle all of your tax filing needs.